Hello and welcome to another video. So I hope you've been well. It's been a while. Sorry for that, but just with this, the sorting out of the screen capturing programs that I was using, just all of them just weren't working. I just wasn't finding something that was doing the job. So I've hopefully sorted it. If this video's made it onto YouTube, then I've sorted it. Um, and yeah, I hope you're good. So I want to go over an example of when a trade is not worth taking. So I was talking to one of good students, Chris, at the weekend, and basically he was showing me some of his losers. He's very good at trading. He understands the knowledge that he has received. He gets the movement of the market, but he was counter trend trading break and retest. Now, the time that I find counter trend to be worth trading in the way that I trade, obviously the counter trend trading to me is the 4 hour/1 hour. So if you're someone that trades ultra low time frames, then you have to think differently than what I'm saying. But I just want to go over an example of a trade that looks all right in hindsight, but actually for the style of trading that I'm looking for, it's just actually just not worth it. So the pair in question is pound Swiss, so pound Swiss franc. Now I've not traded the Swiss pairs for long. They've just came onto my radar. I've added them. Now, obviously, I've still got my main core of pairs that I look at, but I look through this every day and every night in terms of seeing the bigger picture. So, if I just rewind to where price was this morning, so the 7 to 8 candle, okay, this is where price was. Now we are in an area. This orange zone is an area that is a strong area on the 4 hour, but we're clearly in a downtrend. We've just pushed through, and we were possibly retesting it. Now we're pulling back a bit further. We do have this resistance area at 1.2675 that can cause a reaction. Now, for me to look for longs in this particular example, so the pound is strong, the Swiss is weak overall, and I feel that it's worth the opportunity of at least getting into a counter trend trade. I want to be getting in with protection of my stop loss protection, ideally of the low of the day, if I'm looking for counter trend long. So if I'm looking for counter trend long, I'm looking for something like this that comes into the lows, even takes out the low, comes back in, retests it as support, and then pushes higher. This is the way that I would be trading a counter trend move. Now, if I just delete that, oh, oh, how do I? How do delete? Yeah, shift delete. Right. So that's the kind of trade that I would take for a reversal counter trend against the main move of the main trend of the 4 hour and the previous day being bearish. Now, I would much rather take a with trend trade that has more opportunity to go in my favor for a longer period of time unless the counter trend trade is in a really good area on the daily, on the 4 hour, in terms of structure, in terms of the last 4 hour close, previous day's close, etc. Those are the reversals that make the most sense to me, that you'll see in the course, you'll see in other videos. That's what I'm looking for. Now, what actually happens is that what I'm looking for, so if I just fast forward, so we break out. So we break out. Let me just put this in. We break out, we make a new high of the day. So to me, I'm thinking, right, well, we could be in an area that if price wants to continue the overall trend, then it could be an area that we have a strong bullish candle and then a bearish next 1 hour that then drops below the resistance. So we have a bearish next 1 hour, drop below the resistance, sell in this area, first target being the 1 hour support, second target being the low of the day. That to me is the kind of reversal that makes more sense to me in probability terms in the general scheme of things. Now, what actually happens is we use it as a retest. Now, to me, I am far too far into price against the trend to be interested in buying at this area because of the higher time frames. Now, as I say, if your higher time frame equivalent is the 15-minute and you're trading on the 1 minute and that's your style, that's fine. You could probably see an entry, you could probably see a trade that would be very quick, that you would be in and out just with the immediate momentum, and you're happy with that. That's not something that I wouldn't go against. But the type of trade that I like to take is ones that can last possibly hours, even up to a couple of days. So we have the bullish candle now. I'm still thinking of my, if I just move this, of my overall thought process, which is the only direction I really want to be selling is short or nothing. Short or nothing, that's it. So the good thing is that we, at this time, the 9 till 10, that is the last candle of the 4 hour. So if I just make this bigger, so with this 4 hour, it's a strong enough candle, but it's had to go pretty deep to find the buyers. So it would be a logical sense for me to think, right, well, again, we're in a sell high area. The 1 hour lower high is up in this area. The more that we pull back, the more that we're getting into an area that makes sense, as long as there's enough time for volume to stay in the market. And at this time of the day, there is. It's only 9 till 10. And I feel that the volume stays in the market till 3, 4 o'clock, sometimes 5 o'clock, depending on the pair, UK time. So there's plenty of time for price to turn around and possibly get down to the low of the day before the volume starts to just come out the market and we start to go sideways. But it has to happen pretty quickly. Now, I'm not interested in longs. Even although you can see here that it has gone long and it is in an area that price can bounce off of, because price is not close to the lows, I find that the probability is less for me over numerous trades. This particular trade works out okay, but for the type of trade that I want to be taking, for the length of time that I'm going to be in the trade, I just feel that these kind of particular trades are not worth it. So just go here. Now we have a pause. And on the lower time frames, on the 15-minute, this can be an area that is a buy low area that you can take long, but in this particular setup, I take these kind of trades whenever they're in line with the higher time frame, because they're more likely to break out beyond the origin of the pullback, which is this area here, and then continue on. Whereas I feel whenever you're this far against the overall trend, so the overall trend is bearish on the higher time frames, but you are at the high of the day and pulling back from the high of the day, I feel that the likelihood that you're going to make a new high of the day and keep on going to make the trade more worthwhile, better risk reward, is a lot less than if it was with the trend. Now, if you're someone that trades the really low time frames, like the 1 minute or whatever, you could then say that, right, well, I'll just take the trade and I feel that it can be worthwhile to just get in, put my stop loss below the lows and run it to 10 pips or whatever. But that's just not my style. Just not my preference. So you can see here that I was still thinking the same. I was thinking, right, if we can break this 15-minute structure, or if we can do something like this. So we hit off of this area, we react because it is a support area, but because it's counter trend to the higher time frame, we come back up into this area, cause price not to be able to make a new high, then drop through, pull back, and then look for the trade. So ideally a trade around here, or a riskier entry would be in around this area if you saw proof of sellers coming into the market that you were happy with. Something like what happened here, essentially. So you've got an impulse and then you pull back, not quite to the same kind of support as what we have here, but we pull back, fail to make a new high, and then drop. But that doesn't occur. So another option is price comes up into here, makes a push out, comes back in, uses this area as resistance again at the high of the day, entry around in this area, and then stop loss above the highs, going back in line with the higher time frame, and you have a very well protected stop loss for a reversal, but it is in line with the overall trend, with the higher time frame trend. So those are the options for me to take. Now, obviously, not every single time is that going to happen, because you need some counter trends to just keep going, so then actually it does eventually change the trend. So I'll just play it out. So you can see here that we did react off of this high, and there was a very quick short, but then the buyers still stayed in. The pound overall was strong, and then we go and make new highs of the day. So that was a quick trade for someone that could take it from this area. And as I said, if the higher time frames were in an uptrend, I would be keen to take this kind of opportunity myself. But because it's against the higher time frame, it's just not. I've got more options now. It really bursts open to the upside. Now, for me to be looking for longs in this area, it's just not worth it. Even the higher that it gets against a 4-hour downtrend for the current day, and you're hitting new highs of the day, now we are basically at the highs of the previous day. It's just getting higher and higher into a potential sell high area that actually has value, not just for the day, but for the rest of the week. Like, this could be around, if the pound starts to weaken, etc., this could be the area where actually price has the high of the week to then stay in line with the 4-hour trend and possibly get back down to the lows of Monday, which are the lows of the week right now, and then beyond. And those are the kind of trades that I would prefer, but it's just, it'll take a bit of time for this to happen in this area. So yeah, I just wanted to make this video to kind of go over a trade that you can look in hindsight and be like, oh, I could have taken this, but actually what you would have been better doing is looking at pairs that are already on the higher time frame in an uptrend, like pound yen, pound dollar. Trade those, and then whenever pound weakens off, look at pound Swiss, pound CAD as the main pairs to trade back to the downside. rather than taking a counter trend trade that isn't at the extreme buy low area. So your extreme buy low area for the medium term time frame to higher time frame is this area here, which price doesn't get back to. Now, obviously, it does react off of this support area here that you have a push through, pulls back, reacts. But to me, even with this kind of entry in the 7 to 8 candle, you have a slowdown and then a slight pullback. That would probably have been the one that made the most sense to me if it didn't come back to the lows of the day. But generally, I prefer, whenever I'm taking a counter trend reversal, I'm getting in at the lows of the day or very close to it, that my stop loss can be protected by it. So I hope this video has been of use for you, and obviously you can take it into your own trading if you find that you're taking too many reversals against the overall trend, or taking trend continuations against the overall trend, and over a number of trades, they're not working out the way that you want them to. Maybe just take that out of your trading plan, focus on just letting those kind of moves happen, and then whether it's a day later, 2 days later, a session later, it could get to the point that it's actually ready to turn around.